What's popping with you? Why is this getting stuck on everything? Hold on. Jesus Christ. Okay. Wow. There we go. Welcome to Mamba FX. You are now part of the Snake Gang. I mean, even the free members are part of the Snake Gang, but you're like an official member now. So, congrats on that. I want to go over what's going to be in this course. In this day trading course, you're going to receive the following things. You're going to receive, not only are you going to receive, trend lines, support resistance, all that good basic stuff, but you're going to see exactly how I trade, and you're going to learn. And if you dedicate yourself, become a full-time trader. Not only that, if you go, I think below, you're going to get a link to the Discord. That's where the student group chat's going to be. You can post your testimonials. You can post trades, analysis, stuff like that. And also, if you have any questions, feel free to reach out to me on the Discord. It's all down below, so make sure you go click on that link, sign up with Discord, get in the group chat, and let's get things popping. Okay? I'll see you guys in the first lesson. Hey, what's going on, guys? So welcome to lesson number 1. This isn't really a lesson, but more so of kind of how to set everything up and get ready to trade. So first things first, we're going to be using Tradingview.com to analyze our charts. This is going to be where we look at charts and pretty much where we do our analysis, okay? So make sure you guys download Tradingview, or not download, but go on your computer, type in Tradingview, right? Okay, that's first thing. Second thing, where we trade from is going to be the MetaTrader 4 app. That is MetaTrader, if you don't know how to spell trader, 4. MetaTrader 4, not 5, but 4. MetaTrader 4 is where we're going to make our actual trade. That's where we're going to input our buys, our sells, and change our stop loss, stuff like that. That's the app we use. When it comes to brokers, I recommend you use Hugo's Way or Osprey FX. Those are both great brokers that, they have great leverages, which leverage is kind of it's pretty much how you trade. They're going to allow you to use, $500 for every dollar that you have on your account if you choose the 1 to 500. Anyways, those are the 3 things that are going to be needed for sure. Other than that, I'm going to show you guys the color system, okay? I know that I have an orange and white, logo, stuff like that, but I'm not going to be using that when we trade because this is much more simpler to see. This is easier to use. It's very clear, okay? So first thing I want you guys to set up is the color scheme. So if I go to settings and I go to my appearance, we go to symbols. Take a screenshot of this, and this is the exact setup I want you guys to have. Okay, red, green, and then black for the borders and wicks. This is going to be the most clear setup possible. Okay, and that's how you're going to get this coloring. White background. I guess I could show you guys one more thing really quick, and that's going to be the fact that we have white background, and then all of these as well. You see what I'm saying? The vertical grid lines are pretty much not there, stuff like that. So that's pretty much how you have your trading view set up completely. Now let's go into our toolbox. Right here, if you go here, you'll see your trend line. I have it starred. Horizontal line, have it starred. We'll go to here, Fibonacci retracement, very important. Have it starred, and then our long position starred, short position starred, price range starred. Okay, so everything is starred just like that. Perfect. Okay, so this is gonna add your little toolbox. Your toolbox right here. Now you have everything that you need to trade. We don't use any other tools, just this stuff here. Okay, last thing I'm going to show you, Fibonacci retracement. Okay, this is how my fib looks when I draw one out. Boom. Okay, this is my Fibonacci retracement. So if I put it up here, you'll see the full thing. This is going to be our gold zone right here when trading. This is the zone that we like to look at. Okay, 3812 or 382 is cool too. 764 is cool too. But this is our gold zone. If we ever see price spike in this region, then there's a good chance of a reversal. Okay. How I use these. This is take profit 1. Take profit 2, take profit 3, and take profit 4 if using just the fib. But these are not important with this course. This would be more important with the actual sniping course. So you'll get ready for that if you bought the bundle. But this is just the Fibonacci setup. If I go to settings, I'm going to show you guys exactly how I have it set up. Go ahead and screenshot that, copy that, and go ahead and change it to that. And that is going to be the Fibonacci setup, okay? So with all that being said, that is pretty much everything you need to know about setting things up. broker-wise, the actual chart layout, the Fibonacci layout, the toolbox layout, and the app you're going to use, okay? So go ahead and get to the next lesson, and I will start to show you trend lines and stuff like that. Alright guys, so let's take a look at trend lines, okay? Trend lines are very simple to find. It's one of the more simple things in Forex completely, but they're very important to understand, okay? Especially with the day trading course. Both courses for that matter, but definitely the day trading course. So, this is where we're going to take our trend line tool right here, our trend tool, and we're going to mark this spot right here, okay? This is a perfect uptrend, okay? As you can see, market has respected this trend multiple times, so that's how you know it's an uptrend. Boom. Higher high, higher low, higher high, and what do I mean by that, okay? Price made a higher high before coming down to make a higher low. Higher high, higher low. Higher high, higher low, higher high, higher low. Okay, that is what you call a trend, and that's how you get it, or that's how you see the respected portion of the trend. Boom, 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 respected. Okay, now trends will be broken. As you can see, broken trend, came back, retested the trend, and then fell. A lot of times, this is what happens in the market. It breaks trends to retest them. Once you see that retesting, you can kind of assume it's going to come to the downside. And as you can see right there, it retested the trend and broke to the downside. Okay? It's very simple. Trends are very, very, very simple, but they're very important. Okay? Oh, shoot, I'm still drawing. So now, let's look for a downtrend. Right here, as you can see, we have a simple downtrend. Let me tell you something, guys. Trends are not beautiful. They're not perfect. They do not have to be perfect. It will break through sometimes a tiny bit, but that is still your trend. It's very important that you know what a trend looks like. Okay? As you can see, market starts here. Well, it starts up there, but this is where we mark the trend. Okay? Lower lows, lower highs. Lower lows, lower highs on that, just line, just pretty much rejecting right there. Lower lows, lower high, lower low, lower high, lower low, lower high. And right here, you can see the trend kind of came to an end. Broke through, retested that trend line, and shot to the upside, just like I showed you up there. Okay, this is the most annoying chat ever. But it's very simple stuff, guys. Very simple. It's not rocket science here with trend lines. It's pretty much all I need to show you for trend lines. If you need pictures, take screenshots, do what you have to do. But that is how you would draw your trend lines, just like that, and just like how this one was done. Okay, let's go ahead and move on to the next portion of the course. Alright guys, so let's go ahead and go over support and resistance. This is very, very important, okay? Very important, so pay close attention to this. Take your notes, do what you gotta do, okay? When I mark my support and resistance, I'm going to use this box, this rectangle, okay? That's what we're going to use. So check this out. This is what you call resistance, right here, okay? Why is this resistance? The market is resisting the upside here. It can't. It just can't do it. It hits this area, comes down, 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 hits this area, comes down. Yes, markets can break this, okay? You will see markets break this a lot, and it's normal. But it's about what markets do after they break it. I'm going to go over that in a minute, okay? But this is resistance. Pretty much look at resistance as a ceiling. This is a ceiling that markets cannot go above. Yes, they can go above, but they rarely will go above it if you have a major support or resistance area. Now, when it comes to support, yes, I know you're thinking it. It's the opposite. So, this would be a small example of some support. Take my box. Boom. Look at this. This is support, right? Market has broken above this area, and now look, it's using it as a floor, and it's gone. Same thing with this. Support. That is some support, right? And if you were to draw this from here to here, look at that. Support, whatever, it's chilling up here, broken below this former support, and now look, it's using it as a ceiling. Resistance. Support turns into resistance. Resistance turns into support. These things happen all the time in the market. You're going to notice it so much, okay? So always mark up your support and resistance when trading because you need to be aware of these areas, okay? They're very simple to find. Very simple to find, but they're very, very important, okay? So, see if I can find a couple more examples for you really quick. And they're very obvious. I mean, you'll notice it all the time. Support. resistance, I'm sorry. Resistance. Boom. Market could not make it, and it fell. Can you trade support and resistance by itself? Yes and no. You can, but it's very risky, and you're going to notice that you're only going to make like 50% of the trades are going to go positive. It's very risky. You want to have more than just that, all right? But look, support, major support. Look at this. Price cannot break below this. It's using it like the floor. It's chilling on it. This is the floor. This is the actual floor. And if you were to stretch this over to here, you can see price broke below but came back up, and now look, it's using it as a floor. Markets respect support. They respect resistance. It's very simple, guys. Okay? Mark your supports, mark your resistance, take notes, do what you got to do, but this is very simple stuff. Support. Okay? Resistance. Very, very easy. Look at this. This is support turning into resistance and then dropping to this support. It's very simple, guys. Okay, take your notes, rewatch the video. Support and resistance, very simple. Use these with trend lines, and you're gonna be a god. All right, guys. So this is very important. So pay very close attention and take your notes, especially on this portion. Okay, these are amazing things to use when trading. These are called channels. Now, what is a channel, and what is it? What's the difference between a channel and a up or down trend? Very similar to downtrends, price is pretty much hitting the same point over and over again on the trend line, but it's doing it from the top and the bottom. So check this out. If you draw your trend line from there to there, and then again from there to there, what do you see? You see price has now respected the bottom of this channel and the top of this channel. Okay, look at this. Let's see if I can get to my handy dandy brush. So price started here, top of the channel, okay? Bottom, top, middle, top, bottom, top, broke out of the channel, and now it's gone, right? Very, very important that you can establish channels. This is what a channel looks like. Take a picture, do what you have to do. This is a channel. Why is this important? Because when we're doing confluences and we're seeing that price has made a double top, which is just resistance, support, but you also see that you're in a channel, it's deadly. It's very, very deadly. Okay? This is important because if you have more than just one confirmation right here telling you to sell, like let's say right here you see some divergence, and then you see right here, oh, you're at the top of a channel, that's two confirmations to sell. You now have a better chance of making a proper trade than you did before. Let me show you a quick little example. We're at the top of a channel here, but what else do we see? If you paid any attention to the last session, look at this. You see some support turning into resistance. So yeah, price is bouncing on this, broke below it, came to retest this prior support, and now it's resistance, but it's also at the top of a channel. You could have easily took that for a sell. Easy. Boom, we could have entered right here, set our take profit to the bottom of this channel, have our stop loss set just outside of the channel. Look at this risk to reward ratio. You're risking 20 pips for 69 pip gain. That is triple your loss in one trade. Very simple, guys. Channels are very, very important, whether they're going up or down. This is a channel. It's respecting the bottoms and the tops of those trend lines. This is a channel, okay? Take notes, take pictures. It's very simple, and I'll see you in the next area. Okay, guys, now that you officially know how to trade every single thing, such as trends, support resistance, divergences, Fibonacci, all that good stuff, and you've been studying, or even if you haven't been studying, this is very important that you pay attention to this part because this is pretty much your time frames. This is what time frames you're going to be looking at when trading these divergences, okay? It's very simple. We're going to look at the 1 hour and the 4 hour, and that's it. Sometimes the 30 minutes, but most likely never, okay? All you want to do is, make sure you're not messing with the daily, okay? You do want to check the daily to make sure, let's say, for example, let's say you see some divergence, okay? Let's say right here you see some divergence saying to sell. This divergence is bearish, so it's telling you that the market's going to go down. However, let's say you go to the daily, and the daily is showing a huge uptrend that is not pushing down. You do not want to take that trade. So it's very important you check the daily to make sure that you're not going against any major trends or channels or anything like that. check the daily. If you're in a top of a channel, then you don't want to buy on the 4 hour, the 1 hour charts. You know what I'm saying? So it's very important you look at those in confluence with the 4 hour and the 1 hour. Other than that, the 4 hour is what we're looking at. Okay, we want to see what kind of trend we're in. And then maybe we go on the 1 hour to see if there's any type of, bear or bullish hidden divergence to prove that this trend is going to continue. Okay, so we look at the 4 hour and the 1 hour when we look through these setups. It's very, very simple. Some things might change. You might see support and resistance on the 4 hour, but the 1 hour doesn't show that as well. Okay, so those are going to be the two that we use. It's very, very simple, guys. As you can see, the 4 hour here shows some support. If we go to the 1 hour, we might see a nice setup being formed there. So let's check it out. Okay, you see, obviously you still see the support. Just looks like more because each candlestick now is 1 hour instead of 4. So this candlestick was 1 hour of data. This candlestick's 1 hour of data, 1 hour of data. If we switch it to the 4 hours, then each candlestick is 4 hours of data. So it's going to condense all of this into smaller bars, basically, and cents. But it's very important that you use both time frames, 4 hour, 1 hour, in confluence with each other, and then always check the daily to see what the main movement is. Okay, we're not going to look at the 30-minute very often, if ever, or the 15-minute or the 5-minute. It's very rare that you're going to look at those because those, when the 5-minute shows divergence, it's not always as accurate on these bigger time frames are. So we use these time frames always. Okay, so when you're back testing and practicing, demo accounting it, make sure you're using the hourly and the 4 hour. Okay. Alright guys, so this is going to be the Fibonacci section of the course. This is very, 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 very fucking important. Take as many notes as you can. Pay attention to this. It's very simple stuff, but it's very, very important when trading, okay? I have to sneeze. I can feel it coming. So if I sneeze on you guys, I'm sorry. Okay? I don't have the fucking coronavirus. Look, I don't think I do. So, this is your Fibonacci right here. I told you put it in your toolbox earlier in the video, or earlier in this course, so there it is right there, Fibonacci Retracement, okay? How are you going to draw your Fibonacci? You're going to draw it from the main push, okay? The main push. Look at this push to the upside. From here to here, you have a main push. So you draw your Fibonacci from here. Oh my God, my mouse. From here to here. Okay, I'm bringing it over here so you can see it throughout the whole chart. But all I did was draw it from here to the top, okay? From this to the top of this wick, because this is where I see a main push created up. Now, look at the rejection on the 0.50 and the 0.618 zone. If I mark this zone up, you're going to see the rejections all across this. This is a huge sign of this reversal. So watch this. Boom! Played in this zone for a little bit and shot up for major 145 pips minimum. Shot up for, right? So, let's go find you some other ones. Let's see if this is one right here. You can see market structure going up, and then it breaks down with a solid push from here to here. As you can see, boom, market push from right there down. Do we have that rejection? Yes, we do have that rejection. Look at it barely kissed it, but it still rejected the zone. If you would have entered right here, boom, look at the droppage there. Over 100, probably like 90 pips right there dropped. Huge rejection and drop. Okay, let's see if we have one right here. Just mark this up from this push. No, we don't have a rejection here, but we do have a 382 rejection, which is also a major number. So if you see it reject 382, it could also be a good sign. Okay, I'm just going to show you guys some more examples so you guys can really understand what I'm saying here, okay? So, see if I can find any more examples for you folks. Bear with me. This is where the markets kind of got ugly because of the stupid coronavirus, but it's okay. Let's see. This could be one right here. And look, they're not always pretty, but they work. You have a push to the upside from here to here, right? You have multiple rejections near this zone. And then guess what? Boom, from here to here, 120 pips. Profit right there off of that rejection. Can you trade the Fibonacci by itself? Absolutely. But if you use this Fibonacci with other different techniques, such as your trend lines, but not only look at this, we have our trend line, we have our support, then we draw our Fibonacci, we see the rejections in that zone. I told you I was going to sneeze. Damn it. You see the rejections near that golden zone, and you're on some support, and you see the trend. Oh my God, you have 3 confirmations. This is a beautiful setup. Fibonacci is amazing, okay? Set your Fibonacci up like I did earlier in the setup part, and you're going to see some beautiful things here with this Fibonacci. Once again, I'm drawing it from this push because I see this push up. The push stopped there, waited for it to test that zone, boom, test that gold zone, gone. Very simple. Study, take notes, pay attention, watch the video again. Fibonacci is very important. Okay guys, so pretty much now that you know, not everything, but you know pretty much what we're looking for when it comes to the sense of, you know, trend lines, support resistance, the Fibonacci's, the channels, all that, there's one more thing, and this is going to be the most important thing of all, and I mean of all, so pay attention to this section, okay? You're going to go to indicators, and you're going to search up on balance volume, okay? On balance volume. Boom. On balance volume. Now, what is on balance volume showing? This is going to be exactly how we spot our divergences. And you guys know me. You know my YouTube channel. You know that I'm all about divergence. Okay? So what is divergence? Divergence is pretty much a sign of either market reversal or market continuation. I'm going to show you an example of every single type. That way you can study, pay attention, and look for these throughout the market. Okay? So, right here, we see a sign of, this is actually called bearish divergence. When you see bearish divergence, you believe the market is going to come down. Okay? As you can see, if you were to draw from this, let's just say these points right here to this point, right? You have a higher high being made here. But we're going to take a look at our on balance volume and see what we see. And I'm going to make this black so it's a little easier to see for you guys. Boom. But if you were to take this on balance volume and draw that same trend from the same spot, look at that. Look at that. It's doing the opposite, right? This is bearish divergence. This is a sign that this trend is getting weak. This uptrend is now getting weak. Look at that. Look what happened after we saw that bearish divergence. Oh my God, a 250 fucking pip drop. Just ridiculous. That's just ridiculous. So simple. This right here, take a picture of it right now. Screenshot this. This is bearish divergence. This is a sign that the trend is getting weak and it's going to go to the downside. Okay? When you're looking at bearish regular divergences, you draw them from the top. Okay? As you can see, from the top and from the top. What do I mean by the top? I mean the top of the chart, not down here, okay? This would be the bottom, and you're going to need to know about the bottom soon. This is the bottom. No, you draw from up here, the tops, okay? That's bearish, regular divergence, okay? Now, let's look for some bullish divergence, and oh my God, I already see some. Check me out right here. From here to here, what do we have? We have a lower low, and now we're looking for bullish divergence, regular bullish divergence. We're going to draw it from the bottoms, okay? Look at that. Lower low being made, but higher low being made here. This is a sign of market, you know, reversal here, but to the upside now because we're looking at bullish divergence, regular bullish divergence, that is. Okay? Lower low, but a higher low on the OBV. Now we draw it from the bottoms when we're looking for regular. Okay? And look at this. Market spiked up 123 pips. Guys, this is not rocket science. It's very, very simple. We add this now that we see a trend line, whatever it is, you got 2 confirmations. It's beautiful, okay? Now, let me show you guys something very, very powerful, but very, very important, okay? You guys need to pay close attention and take your screenshots because this is very important, okay? When looking at a trend, okay, let's see if I can find something. Would this be some? No. Bear with me. Alright guys, I'm back. I found some beautiful Okay, this is going to be called bullish hidden divergence. Now that we're looking at an uptrend, instead of marking the tops, now we mark the bottoms on the uptrend. Okay, so look at this. Market is making higher lows here on this uptrend, as you can see. Trend is going upwards from this point. Let's take a look at what we see on the OBV. Look at the OBV. OBV is making lower lows. So now we have opposites happening from the bottom on an uptrend. That is bullish hidden divergence. And what does that mean? That means market or trend continuation, right? So the market's going to continue moving in this trend. And what did it do? It sure the fuck did. Boom. I mean, I don't want to measure the whole thing, but I mean, holy shit. Hundreds and hundreds of pips up. Just beautiful. It's just beautiful, okay? Look at this. Now, let's go look for some bearish hidden divergences. And remember, now you're going to draw it from the tops on a downtrend instead. Okay? So let's go see if we can find some. I'll come back to you guys in a sec. Alright guys, so let's look at some hidden bearish divergence. Okay, we see the market is trending to the downside. Okay, from here to here, whatever, the market's trending down. But look at this. OBV is showing lower highs. From this point to this point, we have lower highs being made. But look at the OBV. Oh my goodness, we have a higher high. Market from the tops, guys, because this is a downtrend and we're looking for bearish hidden, not regular, but hidden. Market from the top. And something that I always do to remember this is, look, when you're looking at the tops, obviously, because it's bearish hidden, you can also see it kind of made the shape of a squeeze, right? So look, it made this shape right here. And then from here, it went up, okay? Oops. From here, it went up. It's the shape of a squeeze. And when things get squeezed, they come down like that, okay? That just looks fucking terribly wrong. I'm so fucking sorry, guys. But that's just how I look at it. Okay. When you do it from the uptrends, though, like let's say it was right here, it looks more like an opening. Okay. When things get open like this, they go up. Okay. That's just how we're gonna word it from now on. It's gonna help you guys out. Okay. I have to sneeze, so if I sneeze, I'm sorry. I don't know why I'm so allergic today. But bearish hidden divergence spotted here. Oh my god. And what do we have after that? Market continuation to the downside. 277 plus pips. Guys, it's not rocket science. It's very simple. Alright guys, so let's really talk about what pairs we trade, okay? Very specific here with the sniping strategy. You're only going to trade specific pairs, okay? Here they are. GBP, okay? GBP pairs, but only GBP USD, GBP JPY, and GBP odd. Okay, those are going to be the three pairs we trade when it comes to GBP. What else are we going to trade? Gold. Okay, we're going to be trading gold. Gold is going to be our money maker. This is where we're going to catch all of, if not most, if not all of our pips. Okay, and for those of you who have nice capital and a big account, oh, that didn't work out. I'll put it up here. US 30. Those are the three trades, the three pairs that we're going to be looking at, okay? US 30, GBP USD, GBP odd, and GBP JPY with gold. Those are all that we're going to focus on when it comes to this sniping method, okay? So keep that in mind. Put those inside your little side pocket over here. And, yeah, I know I have everything, but I trade more than just snipes. Put that all over here, and those are going to be pretty much what we trade, okay? So let's move on to the next section. Alright guys, so welcome to the very, 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 very most important part about all of this. This is risk management. And why is risk management so important? If you cannot manage risk on your account, you're going to blow account after account and you're going to keep on losing. You have to have a good risk management to succeed in this industry. It's just the way it is, okay? I suggest that you don't risk anything more than 3 to 4% max per trade, okay? To measure how much you can lose per trade in pips, I recommend you go get the Stinu app. It's STINU, and it's an app, okay? It's an application for your phones. Get the Stinu app, and that's the best way to measure how much you can lose per trade, okay? It's going to tell you what lot sizes to use, stuff like that. But let's say you enter right here for a buy, okay? You want to always make sure your risk to reward ratio is very good. What does that mean? Okay, I think that price is going to come to this point, whatever. I have a 250 pip. See right here, you just how you're going to measure your pips, by the way, guys. You use these, or you could even use this measuring tape or this ruler, and this is going to tell you how many pips. Use this with the Stenio app, you'll be good, okay? So from here to here is 300 pips, about almost 300 pips, right? So 0.01 lot size on 250 pips is $2, no, $25, I'm sorry. So 0.01, you catch 30 pips, you caught $3, okay, on a 0.01. So this would be $25 gain. But you always have a tighter stop loss. So that way, let's say right here, you have 80 pip stop loss. So if this hits your stop loss and you're using a 0.01, this hits your stop loss, you're going to lose $8. But if this hits your take profit, you're going to gain $25. You see why that's important? If you hit your stop loss once, and then you hit a take profit once, you're obviously going to be way up, because look at your take profit number compared to your stop loss. It's very, very important that you always have a good risk to reward ratio, okay? You should have a single win, a single take profit hit should eat 3 of your losses. So yeah, you might have lost 1, lost 2, lost 3, but then you won 1 trade, take profit hit, and it was triple what your stop losses were, so now you're break even. Okay? It's very simple. Another thing is, anytime you're up 20 pips plus, 25 pips plus, even 30 pips plus, you're going to put your stop loss to break even. Okay, you're always going to put your stop loss to break even. So if this is your take profit, this is your normal stop loss. Once you're about here, you're already going to put your stop loss to break even. So that way if it hits your stop loss, you don't lose nothing. Very important, very critical. If you guys have any questions on this, you guys can always reach out to me on the Discord. Okay, risk to reward ratio is good, and never risk more than 3% of your account. Okay, 0.01. 30 pips, that's going to be $3, okay? Remember that number and then multiply that. So if you do a 0.05 and 30 pips on a 0.01 is $3, do $3 times 5, okay? $15 on a 30 pip loss on a 0.05, okay? It's that simple. Hope you guys learned something from that. Make sure you guys have good risk to reward ratios. Do not risk more than 3% of your account, and it'll take you forever to blow an account. If you're using 3% risk, you should never blow your account, because you're going to have to lose 30 times in a row to lose your whole account. It's very simple. Now let's tie this all together. I'll meet you at the next lesson. Okay guys, I just want to say I'm proud of you for making it this far. Obviously if you've made it this far, then you're pretty understanding of all the other lessons, and I think you get enough to get to this part, obviously. Okay? This is going to be a very important one. I know I say that every time, but this is going to be a very fucking important one. It's going to show you how to tie everything together. I mean, this is where the trading really takes place. Okay? So, how do we tie all this together? It's simple. And when I tell you this, you're going to be like, holy shit, it's really that simple. You look for 3 confirmations. You look for 2 confirmations, but you never look at 1 confirmation. You want to have anywhere from 2 to 5 confirmations. Now what does that mean? Okay, check this out. I want to see this trend, right? This trend I see being created, okay? Beautiful trend. Love it. But why would I take this trade? There's no reason for me to take this trade based on it just being a trend. No way. You can't do that. But let's say you see this trend and you see this little bit of support, right? Now this trade looks a lot more healthy. This looks like a more profitable or probable trade, right? Because not only do you have a trend line, you also have that support. So you got double confirmations. But I mean, I like it, but let me draw my fib. Let's draw my fib. Okay, I see a rejection in this zone. I see rejections near this zone. Right in this golden zone, I see rejections. So wait, 3 confirmations. Not only do I have my support, I have my trend, I have my fib zone being touched. This is a nice trade. I want to get in this trade. So we'd enter here. How do you know what your take profit's going to be? Well, if you think this is the trend, you think this thing can go forever. So let's just target this former high. Just in case price gets stuck up there, let's target this former high. And you see this could be resistance because it's kind of been wicked here. I mean, come on now, it's obvious. Look. Boom. So we're going to target this area just in case price rejects again. It's very simple. This is our target area. For our stop loss, we're going to have us a nice little tight stop loss because we believe it's on a trend. We believe it's on support. So if it breaks below that support, wouldn't it kind of just break everything that we believe in here? It would break our fib. It would break everything. So let's just go right here. We're going to put this just below this last wick. Because if it goes down to this area and it keeps dropping, I mean, why would you want to stay in that trade anyways? Obviously, price did not respect you. So check this out. 62.7 pips to a 256 pip gain. Guys, that's risk to reward ratio of a 4. I mean, this is 1 to 4. Your stop loss is worth 4 wins. So if you get this win, you can afford to lose 4 more times in a row and you will be break even. It's so simple. Look what happened. Price came up, wicked in that resistance zone, and came back down. Yeah, it did go back up eventually, but after that wick, we got out. We took our profit. We're looking for another setup. We're letting the market come to us. Look how simple this is, guys. I saw my trend, I saw my support, and I saw my fib zone. I targeted that recent resistance area as my take profit. Stop loss just below all these different confirmations, because if it breaks these confirmations, I don't want to be in this trade anymore. It's so easy, guys. It's so easy. It's so simple. And if you keep this good risk management, you can almost never lose. You can almost never lose. How can you lose when your take profit is 4 times your stop loss? How can you lose 2 wins and it's going to take 8 losses in a row to bring you back to even? 10 trades, all you got to do is win 3 of them. And you are profitable. Come on, guys. It's simple. Put in the work. Backtest. Practice. Get familiar with these markets. And beautiful things are going to happen for you. Beautiful things are going to happen for you. This is the chance of a lifetime, and I don't want you guys to miss anything here. Now, I took this trade here that I just showed you with no divergence showing. No divergence showing whatsoever. Look at this. I don't see no divergence. I didn't need to see divergence. But if you can add some divergence to this, dude, it's over. Once you start learning to add these divergences to your price action, it's fucking over. It'll be the easiest shit you've ever seen in your life. Check this out. We have an uptrend being created here. We'll draw it from these wicks, right? Draw it from these wicks. But look at this. Get this out of my way. Look at this. Higher lows compared to lower lows. What is this? This is bullish hidden divergence. This is trend continuation. The trend is going to continue. And what did it do from that point? It continued. How would we draw our stop loss and take profit? So with this one, we see this is a very heavy zone. Okay? Very heavy zone in this area that it wicks off of. Wicked off of it there. It wicked off of it there where you're entering. It's broken through a couple times, right? But it's okay. Check this out. This is easily a start of an uptrend. Let's set our take profit and our stop loss. We entered here because this is where we caught it. We want to target this zone because we can see some resistance in this area. For our stop loss, what are we going to do? We're going to go just below this zone because it's already wicked right here a couple times. I don't believe it's going to come back. I don't. 20 pip stop loss, 60 pip gain. 3 losses are the equivalent of 1 gain or 1 win with this setup. Look at this divergence. Look at the support system. Look what the market did. Shot up. Take profit smashed. Easy. It's very simple, guys. You guys need a back test. You have to back test, okay? You have to. If you don't back test, don't expect to win. Practice. Demo account this and keep at it. And I promise you, it gets simpler and simpler the more you do it, okay? I've been in your guys' shoes. I know how hard it can be. But if you practice with this strategy, you're going to be successful. Look at this. In this area, we have some support. Both sides. Broke through. Retested. Look at this. Let's draw our Fibonacci. Where are we going to draw our Fibonacci from? Not down here, but right here, because look, price came down. This is where that price push happened. So we're going to take it from here to here. Look at this. Golden zone is being wicked in hard on some support. This shit is going to skyrocket. And what did it do? Put our take profit to this former wick. Put our stop loss below this support. Look at that. 15 pip stop loss for a 74 pip gain. 1-to-5 ratio. It would take 5 losses in a row to hurt you after getting 1 win. Look at this, guys. This is serious shit. Once you're in this area, what are you going to do? Stop loss to break even. You're up 25, 30 pips. Stop loss to break even. Let it ride out. Once it gets up here, take profit's been hit already. Golden. It's not hard, guys. It's really not. I really want you guys to look for 3 confirmations per trade. Nice tight stop loss and a big take profit. Stop losses to break even after 30 pips. And watch what happens, guys. Okay? Practice, practice, back test. You got this, and I believe in you, okay? You got this. Congratulations, you have made it to the very end. If there's anything you're unsure of, make sure you go back, rewatch videos, back test, practice, do what you gotta do. If you have any questions on anything, you're unsure of anything, I'm here, I'm your mentor. Go to the Discord, ask me questions, and I will answer them as soon as I can. I am a busy guy, but I will answer them for you, okay? I'm so proud of you for making it this far. Great things are in store for you. Great things are in store for you. You just got to put your mind to it. You have to dedicate yourself, and you have to work hard because it doesn't just come easy. It doesn't just come for free. You got to work your ass off just like I did to get where I am today, okay? It's simple stuff. It's not hard. I believe in you, and you need to believe in yourself too, okay? Start demoing it. Start back testing. Start practicing. Get yourself some capital and get to it. Because time ticks fast. So do it now. Do it today. Start practicing now. Great things are going to come your way. Okay? Make sure you join the Discord. And I will see you guys there.